All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we have a jam-packed video. As you can see at the top here, the Dow tumbles 800 points in the worst decline of 2025 so far. So today we are digesting this stock market kind of downtrend here of about 1.66% in SPY. So whenever there's a down day like this, I know people can kind of get fanatic. They can go crazy. Look, we have a down day. Look at the facts, okay? We have Yieldmax down about 3%. We have some real big hitters in Yieldmax down about 16% today, for example, SQY. And what I want to do today is I want to walk you through what I'm doing in this position. Did I make any buys within my portfolio? I did. And what do I think about some popular kind of Yieldmax ETFs such as Coinbase, as well we have TSLY, we have MicroStrategies, MSTR, and then one of my other holdings, Babo. So what I want to do today is I want to talk about this downturn. I want to talk about what I see. Do I see an opportunity and why I'm actually a little bit cautious to start investing at this current downturn? So we're going to talk about that. If that does sound good, we're currently up to 7,545 subscribers, 292 subscribers in the past 28 days. So subscribe if you want more videos like this, more updates, and more potential buys. So to kind of reason with you here, my portfolio is down about 3.46%, which is about $1,800 today, which sounds like a lot, and it is a lot. Nonetheless, whenever your portfolio goes down about 3% in one day, that is a huge hit. Now, the overall market's down about 1.65%. So why is my portfolio down so much? Well, I do invest in a 3x bull, SPXL, pardon me, which is down about 5%. I have about $1,000 worth of holdings within that. But then I have a bunch of other major holdings, such as MSTY, which is down about 5%. I have PYPY down 2.35%. YMAX, my main holding, down about 3%. And then SQY, which is down about 16% today. So the main kind of topic today here, SQY, basically, Square is down about 17-18% today. That's a huge hit. And it's down off the basis that they reported their earnings today and they weren't as expected. So what do? When I see an ETF that I buy or stock that I buy, which earnings don't hit, they're not as expected, what do? First, I look at the facts. Okay. Block. Is Block a good underlying company? I love their underlying business. I think in the future they're going to be better than they are today. But how did the earnings perform? Because if they're not a cash flowing positive company, then I don't want to own them. Well, the earnings per share came in at 71 cents and their expected was 87 cents. The revenue was 6.03 billion where they were expected 6.29 billion. It's not the end of the world. Of course, they missed their earnings, but their revenue of 6.03 billion is still pretty good in terms of their quarterly outlook. So you're looking at their recent quarters, they're a growing company. Of course, there's ups and downs with every company. They're still growing their business quarter over quarter. You could see here, this is 5.975 billion, whereas they reported earnings of 6.03 billion. So quarter over quarter, they're still growing. I understand that it looks like Q2 in 2024 was better than this current one, but year over year, they're growing their revenue, which is what we want to see. So that's awesome. They are a company which has a fantastically balanced balance sheet we have here, go into quarterly, we have total assets about 36 billion and total liabilities about 16 billion. There's that $20 billion difference, which is awesome. This is not a huge company in terms of market cap. It's $42 billion, which is a big company, but when you put it in perspective with their total assets to liabilities, it's sitting very well, in my opinion. This is simply just my opinion. And then in terms of cash flow, their cash flow could be better. In terms of free cash flow, you could see year over year, it's not amazing, but for the past year, it's been growing very nicely. Their operating cash flow has been growing very nicely, and that's a company that I want to hold. You could see here, their end cash position sitting at about $13 billion or so. So this is a $42 billion company, $42 billion market cap company, which is sitting on about $13 billion worth of cash. That is fantastic. That is going to hold them out for the future. And of course, this is still a positive cash flowing company with revenues, for example, as I read through here, Block said it expects to deliver gross profits for this year of 15% to 10.22 billion and adjusted operating income of 2.1 billion for a margin of 21%. So basically, of course, you kind of see their current earnings where they're earning about $6.03 billion in terms of revenue, with the new acquisition of Afterpay for $29 billion. This was back in 2021, which this week Afterpay on the Cash App card begins to roll out. This is a new service by Square. They're expected to boost their revenues up to $10.22 billion for 2025. I think that's fantastic. I do believe in this company long term. And so what I did was I actually bought more SQY, the Yieldmax ETF, and I bought it on margin, believe it or not. So why did I choose to do this? I bought about 150 shares at $13.64 on margin. And this was the only buy that I made today with all of kind of the downward pressure, because I believe in SQY long term. It is a Yieldmax ETF which pays a high dividend. So the high dividend is going to go back and pay down this margin debt. And I do have a lot of available margin space. If I go to my margin account, I have about $19,000 still of buying power. So I have more than enough buying power to protect myself if SQY was to crash. But the whole reasoning behind this is SQY has a good underlying company, in my opinion. I don't believe the earnings reflect this negative 17 downtrend. I think this downtrend is kind of multiplied by the fact that we have a downtrend in the market today. So I seized the opportunity to buy more SQY. SQY will pay down my margin debt. It is a Yieldmax ETF, of course, as I mentioned. And what I would never do is I would never buy SPXL on margin. This is a 3 times bull on the S&P 500. It moves 3 times, 300% in a given day, up or down on the S&P 500. And why I would never buy SPXL on margin is because it does not return me cash flow like a Yieldmax investment would. For example, I would only buy Yieldmax investments on margin. And anything in SPXL, I will own outright. What I did today was, you'll notice my account still sits at $52,000 because I deposited about $2,000 worth of cash, and I bought DLR.U.TO. I bought DLR.TO, which I will journal over to DLR.U.TO. But basically, I bought this so that in the essence that I do have something where SQY does downtrend and I need to put cash into my account, I have cash sitting in this position here, which is basically holding cash. I'm converting it to USD. So my cash is covered, everything like that. That was the only buy I made in this account. But there's other stocks today that went down heavy, such as Coinbase. We have Tesla, also down about 5%. Tesla over the past 6 months has actually been hit pretty hard. We go to the past here, trended up to about $500. This is where I actually sold out of TSOY, and it's been hit very hard over the past little while, down about 25 to 30%, which is kind of crazy. But Tesla's still a fantastic company, still a $1 trillion market cap. And really, if you said Tesla would be trading at a $338 valuation last year, you'd be like, that's a fantastic price. But of course, because of the huge run-up, it seems like Tesla's trading at a discount right now currently. Am I buying any Tesla or TSOY? No, I'm just kind of spitting the facts. Tesla's down huge. And when you look at Yieldmax, for example, people kind of compare and say, whoa, like Yieldmax was up to about $18, $19 in the past, and it's underperforming SPY. Well, you have to look at it this way too, is that some major players that are maybe not as huge in SPY are affecting Yieldmax bigger, such as MSTR, for example. Or, of course, we have SQY, the Square Yieldmax ETF. There's a lot of ETFs within Yieldmax that have been hit very hard, which present a good opportunity if you're a potential buyer of Yieldmax, which I will be in the future. Another one, we have MSTR. I'm not buying any more MSTR until I see Bitcoin have a slowdown. And honestly, I do think that Bitcoin is going to go into a little bit of a downtrend. And of course, when we have downtrends in the market, it's only going to exacerbate that, in my opinion. The only ETF and the only stock that is up currently is Alibaba. Alibaba's an ETF which I bought super heavily. I'm basically doing the same strategy with SQY as I did with Alibaba. Over the past 6 months, Alibaba's up 75%. And in the past month for Babo, it's up about 41%. This is the only ETF that's up today currently for me. I bought an average share price, 294 shares at $17.70. $17.70. I'm currently using this as a capital appreciation play and a play for high dividends. This is my strategy with Yieldmax ETFs, and this is what I like to achieve. Babo is exactly that. I like to achieve really a 100% ROI. I'm currently at a 33%, which is still very good. But basically, Babo, my whole vision for this was I was buying Babo back when it was about $80, the underlying stock share price. And I was buying Babo when it was about a $17 and $16 share price. This is the same thing that goes for SQY. The reason why I'm buying Block so heavily now, and the reason why I took out about $2,000 USD in terms of margin debt, is because I believe the underlying company is still well. I believe this is a huge overreaction in the share price, such as we've seen in Babo, and I'm taking advantage and buying the Yieldmax ETF at a great price. I want to get a fantastic average price here, so that way I can achieve appreciation and as well high dividends along the way. The one nice thing about Alibaba is that it's a Chinese company. Some people view this as a negative. I view this as a positive because it's overseas, and whatever happens here, for example, in the North American markets where we see a downtrend of 1.7% today, it doesn't have as much of an effect on a Chinese company because it's in a different marketplace. And that allows Babo to have great days when the market has poor days. It also allows Babo to have bad days when the market has good days because it's not directly correlated, in my opinion. So this was just an overall view of what's happening today. It's a huge downturn within the market. I have not bought more SPXL. If SPXL trends down, I will definitely be adding more cash. Likely what I'll do is I'll use this DLR.to position in order to buy more SPXL, because anytime SPXL is a great price, I'm going to buy it heavy. It's going to be a long-term hold for me, and over time it is proven to be a better investment than investing strictly in SPY. If I go to the 5-year here, up 80% here. SPXL 3 times bull on the S&P 500, up 144%. So this is my play for capital appreciation, as well as finding a bunch of great Yieldmax ETFs at great prices like I did with SQY today. So that was a little video on the downturn. Always a lot to talk about when there's a downturn within the market. If you guys want any future updates, you got to subscribe. 7,545 subscribers. Please do remember to subscribe. Give this video a like. Comment if you're buying anything today. If you stayed to the end of this video, that would be awesome. I hope to see you guys in the next video, and please do take care until next time.